Hi guys, welcome back. Today I want to talk about JinkoSolar, ticker symbol JKS. Something had happened and I need to warn you about this. Before I begin, let's go over with our stocks. First, our baby NIO. Now the stock price didn't move much today, but there was a news that came out that I want to clarify. Is that NIO just spent 850 million to buy back its share of NIO China. So NIO has put 75% of NIO's equity in China, called NIO China, and the rest of the 25% includes the assets in the US and Germany, etc. And last year, in 2020, when NIO was in deep trouble, it got a bailout loan from the Hefei government of 1 billion to inject to NIO China, and in return, the government would own part of the share with this loan as a shareholder of NIO China. And right now, NIO is trying to pay back the government to buy its own share back. So it means the government will have less and less share of NIO China. And it's been the third time already they have been paying the government back for the loan that they got last year. So right now, for us as investors of NIO, we are investing in which together takes up to 90% of NIO. So I think this is a good news for us, all of the NIO investors, because I think this is the way Li Bin is trying to be responsible for the investors of NIO. So there is nothing to worry about for this news, okay? Next is Luckin Coffee. I have been saying that it's trying to push the 250-day moving average, and right now it's still getting rejected and trying hard to push through 12.8. So we need to give it more time. It might be shaky, it might come back to backtest. I'm not so worried about it. EH is having a correction. For YSG, I said last night that it might come back to backtest, and today it came back to backtest and stopped at exactly the previous high, which is the closing price of 21.35. Today, the closing price is 21.36, close enough. So it's backtesting and got support from the previous high. It might need to consolidate a little bit here because it's gone up quite a bit. WIMI had a 10% increase today. Yesterday, I said that if you want to buy in, 7.5 to 8.5 would be a buy-in price. Today it touched exactly 8.5. For Baidu, last week at 2:30, I said it was a good buying opportunity. As of right now, we are trying to stay above this really long-term rising trend. If we can stay above that, expect it to keep going. So it looks like Baidu is getting back on track. Mesa was doing well these 2 days. It had increased more than 10% in 2 days. As I said, my short-term price target is $8 to $10 and $15 in the longer term, so I'm gonna keep holding it. But if you worry about the earning that's coming up soon, now keep in mind the earning is February 9 after market close. So if you worry the earning would be a bomb, you can always take profit before that. But for myself, I'm gonna keep holding. Lu is growing okay. It might consolidate a little bit first. Now let's talk about JKS, JinkoSolar. The news had came to my attention. This article said JinkoSolar is at the stage preparing to go back to the A share in 2021. It means it would go back to be listed in the A share in Shanghai. And it's not the only thing. Here it says JinkoSolar's stock would peak in 2021. And in the solar industry, there are at least 10 other stocks that's better than JinkoSolar. According to Zacks Equity Research, the Q3 of 2020 has published EPS of minus 91 versus the estimate of positive 85 cents. And the decrease of margin to be 17% instead of the previous 21% in 2019. Also, according to Simply Wall Street, JinkoSolar in the next 3 years would would have low return on investment. And the debt being 197% is very high. So what do I think about this? First of all, let's talk about the being public in the A share in Shanghai. So what's going to happen? Does that mean the whole company it's going to go back to the Shanghai Stock Exchange A share? If this is true, then that means as the investor of JKS, we either need to cash out before it happens, or we need to move our share back to Shanghai. Now that would be terrible. So that's scenario 1. And scenario 2, it would mean that the part of JinkoSolar would be one listed in US while the other part listed in A share. It means it will go public as a second time. The examples are like Alibaba, JD. They are the examples of being public in the US and then being second time listed in Hong Kong Stock Exchange. So it's normal for the company to be listed in 2 places. There are many international companies that are listed in 2 stock exchange. So that's why I would favor scenario 2, because I don't see reason why it has to completely move to A share and give up being listed on US. That's why I think the article is quite misleading. And the second thing is, the article said the stock price would peak in 2021. That means right now we are already at the top, and we're likely gonna see very, very bad return on investment from now on, which I find very strange to believe, because the solar industry, in my opinion, it's only at the beginning right now. It's far away from being the peak. Just think about all the EV demand in the world in the future, and also the need of new energy, as all the government in the world would continue pushing this. And the article also talked about the decrease of margin, which is understandable as a business need to expand. And as I mentioned in the last in-depth analysis video I did on JKS last week, they are building multiple projects at the same time, and they're working on the world's largest cell factory. This requires a lot of money to spend, but at the same time, they are also increasing their competitiveness. And as more competitors get into this industry, it makes sense for the margin to get less because it needs to lower the price. This is the same for every single industry. As the industry gets more mature, the price of the products would always reduce. But at the same time, the total market share of solar energy, it should keep increasing over the years. So as long as JKS can keep increasing the competitive advantage, then I would not worry about the margin getting lower. And for the debt issue, because when the industry is at such early stage, and if this company have good moat, it would be easy for them to raise capital by releasing new share or convertible notes. And worst case scenario, the government would support. So I don't worry about the debt at this moment, because I think right now the moat is the most important. Just look at NNDM, Nano Dimension. Every time they release new share, it's always subscribed. This is how most companies in the industry that's early raise capital, and investors would be happy to subscribe because they see the future of the industry. Now we can look at the institutional ownership of JKS. There are 198 institution owners. Compared to a few months ago, it's a 10% increase, with 33 million shares owned, which is 1 million more than last quarter. And institution value, 1.5 billion. It's more than 50% of the total market cap of JKS, which is 2.9 billion. And it's near 40% increase since last quarter. So if JKS is really moving back to the A share, how come the institutions did not sell out? And if its fundamental is getting so bad, why did the institutions increase holding of 40%, owning more than half of the company? And with such bad news one after the other, the share price barely dropped. And during the market correction for the few days, it was staying flat mostly. And the sell-out volume for the news, it's so little. If the institutions need to sell out and they own more than half of the share, then you should expect the sell-out volume to be like this or like this. So this is why I don't believe in the news. I believe in the share price, and I prefer to look at what the institutions are doing. So that's why these 2 days I've been buying more JKS, because I don't believe in the news. But of course I might be wrong, so you should not blindly trust what I do. So if you don't feel secure, you can always sell, or you can set a stop loss of 10%. So 10% would be the maximum of what you lose, so you can feel more secure. I have no exit plan for JKS, as I have decided to stay with it and keep holding. And if it continues to dip, I will continue to buy. And I will sell when I believe the company has no more future. So that's what I want to share with you about JKS today, to give you an update and a little warning of what's going on so you can make an informed decision. And if you have enjoyed my video today, please give me a big like and leave me a big comment. Thank you. That's it, guys. Hope you can find my video helpful. Make sure you subscribe to my channel and give me a big like. Thank you.